Welcome to our session on raising capital through IPO. As we've mentioned, my name is Grieve. I'm from the ASX, and I won't actually introduce all of them because they've just been introduced on the panel. But really, our task today is we've heard lots about companies in the region listing on ASX. Indeed, we heard Patrick Grove in his very passionate speech today. That listing on ASX was really the beginning of the success of his group. And of course, we've heard of other companies following since, including Ming this morning, and we've got Netccentric here as well. So to really kick things off, I just want each of the panel to perhaps just introduce themselves, explain where they fit in the IPO process, and also perhaps to just give a bit of an observation about the current conditions for IPO in Australia, perhaps make some observations about some trends that you've seen, and also just comment on some of the successful IPOs we've seen recently. And Ming here, who successfully listed Netccentric in, I think, July last year. Perhaps he will also just explain some of the thought process that went behind listing on ASX and some of his experiences. So perhaps starting with Rory. Thank you.
Yeah, thanks, Eddie, and good morning, everyone. My name is Rory Cunningham, and I'm from the ASX. So obviously, the role that we play in an IPO is the eventual listing of a company onto the stock exchange. And from our perspective, the last couple of years have been very exciting, particularly for the tech sector and listings on ASX. And I think that's a trend we've not only seen in Australia but around the world. More recently, the last 12 months has also been very interesting. We've had over 25 IPOs of tech companies on ASX, raising almost $1 billion over that 12 months. And over the last couple of months, we've had some exciting IPOs. At the large cap end, we've had WiseTech, which listed with a market cap of just under $1 billion and has proceeded to trade above $1 billion since its time of listing. At the mid-cap space, we've had Redbubble, which raised about $40 million and has traded well in the aftermarket. And then we've had a number of companies at the small cap end of the market. So I think it's been an interesting environment.
And Matt, from Canaccord.
Good day, everyone. My name is Matt Storey. I work at Canaccord Genuity. We're a Canadian investment bank, and we specialise in the small and mid-cap space, and technology is one of our strongest verticals. We've been quite active in technology in Australia as well. Floating Redbubble, which is listed recently, we were the lead on that transaction. Kogan, which has been very well supported, also will be listing soon. And our head co up in the US was one of the brokers on the Atlassian transaction. Obviously, in the US, it's been a very quiet IPO market, and the term unicorn, is brought about by the large amount of private funding that these companies are receiving. That private funding to that quantum is not available in Australia, and the ASX has been a great exchange that will support technology companies listing earlier, and that ASX listing IPO money is effectively the most available form of funding for these growing technology companies at the moment. And the investing market, the institutions are really supporting them. Australia is a small country, 20-odd million people, compared to the 280 million smartphone users in Asia. We are a very small country of total population, and we look for growth, and the technology companies are enabling investors to find that growth.
Thanks. And Iain.
Good morning, everyone. Iain Laughland from Norton Fulbright in Sydney. So we would act as legal advisors, obviously, in relation to any listing. We've been involved in around, I'd say, 6 to 7 tech or disruptive company listings in the last 18 months. It's certainly been a very hot sector in Australia and for the market. I would say, some of that growth has been driven by what we call backdoor listings. there's a sort of front doorway and then a back door, which might involve backing into a listed shell that is no longer required for its original purpose. And we've seen, obviously, given the Australian economy, a number of mining shells available for that backdoor listing route. And I don't think ASX has any particular preference as to whether you go front door or back door. It's just a case of making sure that the company has the quality and the integrity to take that route. So I think the market is still open for whichever route you would prefer to take.
Thanks, Iain. And Ming, the thought process behind the listing and the journey to get there, and how has it been since?
Yeah, okay, so hi guys. I come from the entrepreneur side of the story. I co-founded a company called Netccentric, a social media solutions company with my business partner Tim, 10 years ago now. We bootstrapped it entirely. We had 55,000 Aussie dollars, and we churned a profit every year. 10 years in, we conducted our first fundraising exercise, and that was through the public markets in Australia, through the ASX. We started that process about in November 2014, and we successfully listed in July 2015. So learned a lot, and very interesting, and I think that the ASX is a great market so far for us. Perhaps if you got any questions, you can ask me.
Thanks very much, Ming. This one perhaps is just sort of, I think, to expand a bit on what Matt said. There are obviously lots of different options for companies in the region to raise capital. There are obviously private funding options. There are also local exchanges, main boards and second boards. What is it about the Australian market that kind of sets it apart from other markets and makes it an attractive option for companies in the sector?
Well, Eddie, first thing is there's lots of money down there. We have a compulsory superannuation system in Australia. There's a lot of money that needs to be invested on behalf of the people of Australia, and that finds its hands into financial institutions that manage money. So we have a very large institutional investor base. Canaccord deals with over 200 of these funds, and they range in size from sort of a $10 or $20 million fund up to multi-billion-dollar funds, and they all have different amounts of money apportioned to companies of different size. So we also have a large sort of retail stockbroker base, which means that the mums and dads can get access to these companies as well. And when a company is coming down to Australia and sort of being marketed, it can meet through their investment bank or broker a very wide range of investors. And those investors, because of the rules behind a prospectus when listing and also the regulations of the ASX, that investor gets a fair bit of comfort around the homework or the due diligence done on that company coming to market. So it's a rigorous process, but the investor feels secure in what they're doing because of the background work that's done before a company comes to the market to list in Australia.
I might just add one of the unique factors about our market that's not as recognised, I suppose, in other regions around the world is that we only have one board in Australia. So when a company lists on ASX, it's listing on the main market. There is no junior market. I think it's a really powerful thing. We've had 10 companies from the US list. We've had over the last 12 months. We've had 20 from Southeast Asia. And when we compare to other markets around the world, having access to the entire investor base that's connected into our market is a very powerful thing.
Thanks very much, Rory. Did you want to comment?
I'm basically coming from the perspective of a listed company. I think a lot of people have asked me why we listed on the ASX. And clearly, the most important reason is that the investor there is very cognizant of tech stocks. They understand it very well, and they're willing to dabble in it, right? Unfortunately, they say that Asians are gamblers, right? But that doesn't really show up in the Asian capital markets, right? You know, like the stock markets in Asia are very much more bread and butter. You know, like the FMCGs do well, the engineering companies do well, like, you know, opportunities that are conventional and that people can understand in Asia do well. But in Australia, what I found is that they're very welcoming, the capital markets are very welcoming to outside opportunities, and I think that that's a great bit.
Iain, did you want to comment on that? No. Okay. Well, I guess just going back to Matt, what sort of, you know, you've got somebody here, I'm sure there are plenty of people here that are looking, you know, at the possibility of listing on ASX or somewhere else. What are investors in Australia looking for in terms of an IPO? And if you could also perhaps comment on valuations. So actually Rory and I spent some time yesterday meeting people around the city, and a common question that came up was, you know, how are these companies valued? What sort of PEs do we see? What sort of multiples, you know, price to sales multiples do we see? Could you comment a little bit on that, please?
When the Catch Group listed in Australia earlier, their market cap at listing was sort of between 25 and 30 odd million dollars, and that was sort of 2007, 8, etc. The world's changed a little bit post the GFC. There is certainly a preference from the investors to see larger companies, and the reason for that is obviously liquidity. When the GFC happened, a lot of investors were caught in small companies, and the illiquid nature of them means they couldn't get out, and the people behind, you know, who gave them that money said, I want you to invest in bigger companies, more liquid companies that enable you to get in and out of an investment. So there is certainly, and each stockbroking house or investment bank has its preference or its sort of expertise in different size of companies coming down to Australia. Us, for example, tend to, you know, we are a growth partner, a capital partner that wants to find you between 50 and 150 million market cap, and we want to grow with you to $1 billion. Also, the number of investors that can invest at a certain market cap go up greatly. So if you're a $50 million company, there might be 10 or 20 institutions that can invest. Of course, there's a much larger retail base. If you're a $100 million company, which is a magic sort of number for them from the market cap perspective, then that number of investors triples. If you're a 200 million market cap, then that, again, there's a lot more investors that can invest in you. From a valuation perspective, these early stage companies tend to reinvest most of their money. So profits and EBITDA and net profit after taxes, that they're not expected to generate those early days. Our analysts, we do the investment banking part. We have a sales team that sells the product to the investors, and we have an expert, which is the research analyst. Our analyst is tending towards, he does look at sort of enterprise value to sales, price to sales, but he's tending more these days to look at gross profits and gross profit margins. So they want to see growth and looking at enterprise value to gross profit. And they range in multiples from sort of 3 to 5 for some of these newer, smaller companies, and REA Group and others have a much higher multiple because they're effectively the dominant player in their sector. So they're the sort of the metrics by which people are looking at these days.
Yeah, great, thanks, Matt. Iain, just turning to you, you mentioned you know, IPOs and the process, and also backdoor listings. Could you, I think it's probably an appropriate time, given we're talking about size of companies, could you perhaps just outline what the minimum requirements are for listing, and also talk very briefly about the process and you know, the preparation of the prospectus, due diligence, etc. I mean, I'm sure you could probably talk for an hour on it, but if you could do it very briefly, thank you.
Yeah, sure. I don't want to dull you all with the legal requirements, but very basically, currently on the ASX, you would need to have net tangible assets of 3 million or a market cap of 10 million for listing. That's what they call the assets test, and I won't go into profits because I think that's probably for the majority irrelevant. On top of that, you would need between 300 to 400 shareholders on the register after your raising to make sure you satisfy the shareholder spread requirements. There are changes afoot at the ASX to amend those numbers. The net tangible asset test will go up to 5 million with a market cap of 20 million. That will possibly come into play towards the end of this year. And also the shareholder spread, though, will reduce. So the shareholder spread will be between 100 and 200 shareholders holding $5,000 each, subject to how much free float there is available at the time of the IPO. Briefly, just on the process, look, it is a reasonably lengthy process. It probably is about 3 to 4 months from first kickoff to getting onto the markets. As Matt, I think, mentioned, there is a thorough due diligence process to be gone through. One of the requirements is you must lodge a prospectus with our securities regulator. And under Australian law, there is a due diligence defence for any misleading or deceptive comments that might be in that prospectus. And therefore, there is a very well-worn path of creating a due diligence committee of executives from the company, plus legal advisors, plus accountants, plus any other specialists that might be required. And there'll be a number of meetings whereby we go through a due diligence procedure thoroughly before signing off for the board, before lodgement of the prospectus. So I think that's sort of the basic outline.
That was pretty good to get through that in such a short time. We might come back to the question of the changes that are proposed, and I'll get Rory to comment on what the rationale for them is. But just before then, just going back to Ming, so you've had nearly 12 months of listing. You've been through the experience. I mean, what were the highs and what were the lows, and what would you suggest to anyone else who's looking at listing? What have you learnt in hindsight?
So the high is quite simple. Listing, getting on the board itself. I mean, when you're running the process, you're running it really hard. And I think you build this mental resilience to think as though you're not going to list until the day you go to the ASX, right? And you ring the bell and you see your counter there. So I think you have to build up this kind of resilience. I think the low point for us was definitely we had a little bit of a hiccup midway where we had to change our broker, basically the broker that we had didn't really have the confidence in us to list, and we had to change. You know what I mean? So it's really, what Patrick talked about earlier, which is pivoting, right? You need to pivot as well and keep on persevering through to get a result. And you have to push everybody on the team to do that. It's not just, it's the lawyers, the accountants, the brokers. You've got to kind of tell them, listen, this is going to go, this is going to work.
Okay. Well, I think then I might just ask Rory just to quickly comment on the rationale for the changes. There's been quite a lot of press coverage, and I think it's probably got to this region as part of the world as well, that ASX is clamping down on tech listings, etc. And I thought it was probably worth us just clarifying that. Rory, would you be able to do that?
Yeah, thanks, Eddie. Ian's talked through the changes, particularly I think as it matters probably to this audience and a number of other sectors, the normal way in which, or the usual way in which companies enter is via the net tangible assets test. Currently we have a net tangible assets test of 3 million. And there's a proposal out there to increase that incrementally to $5 million. If we look back, what we've seen over the last 12 months, and I think in the reverse takeover or backdoor space and some of the IPOs, we've seen some very, very small and extremely early stage companies coming to ASX. Now, the costs of being a listed company, both the costs of doing the transaction and then the ongoing considerations it's an expensive exercise. So really what we've tried to do is incrementally adjust that. We're actually just keeping up with inflation, so 3 million to 5 million. And I think what we'll see, instead of companies raising that $3 million to $5 million, they'll now be raising 6 to 7 at kind of the smaller end of the market. Yeah.
And Matt, I think you might have already touched on this, but is there a size? Those are the minimum requirements. We've spoken about the existing ones and what's proposed. Do you have any advice for people about the sort of appropriate size to be looking at a listing? What's the minimum in your view?
It's hard. There's no hard and fast rule, and people want to see a minimum amount of liquidity being, say, 25% as a minimum. Again, if you want to list early and you have something that is really good and very defendable, then you can list early, whether it be through a front door IPO or an RTO. Yes, if you're coming to market at a 50 million market cap, there'll be a certain number of investors that can invest, and if it's 100 million, there'll be a lot more that can invest. And the bigger you are, the higher the multiple that will apply to your valuation, and valuation is all important to everyone here. What I would like to add is what Australia is looking for, especially in an IPO business, is something that it gives investors growth, and it's something that we can't access maybe in our local economy as well. You've got a very big economy. Asia's a very big place, and if you bring models or proven businesses that have worked in a first world, and obviously in the US it's a big population, there's been lots of companies backed, but if you're a first mover and you're dealing with the Asia population and the Asian markets, and you are the leader, and it's a defendable business that can probably do it better or be more nimble or work on the available technology here, whether it be the phones, etc., and you can beat the big guys over in the US and you can win this market, then come to Australia. It's a great exchange. We will be able to provide you capital early. The IPO is not the end of the journey, it's just the beginning. It's another source of capital. Your share price can go up and you can access capital far more readily again and far more quickly than doing your IPO all over again. And that's the sort of businesses that, fast growing, defendable position that will be very well rewarded by coming to the ASX.
Thanks, Matt. And while you've got the microphone, another area is backdoor listings, which Iain alluded to, and we've had a record number of backdoor listings over the last 18 months, and people, often ask, what are the pros and cons? What would you recommend? Perhaps you could kick off with some of your own observations about backdoor listings and how you would advise people looking at the two options.
Backdoor listings is still, for the broker and the company, they're almost the same amount of work. There is often more flexibility around valuations, but also the investor set on a reverse takeover of backdoor tends to be more retail focused. The issue that you've got to be careful about, if you're the company that's doing the reverse takeover, is to look carefully at the company you're backing into. What were they before? Who owns the shares? Are you likely to get a positive response from their shareholder base when coming into their company? Or are they going to use your new great business as an exit mechanism for them to sell out? So that you need to do your homework. A front door listing, you're master of your own destiny in an IPO. In a backdoor listing, you've got some legacy issues that you've really got to do your homework on, and you've got to choose the right broker or investment bank to help you, and legal advisors, of course, to do the homework on that vehicle.
Thanks. I think we're out of time, but I just wanted one very quick comment from all of you. What would you say is the most important success factors in a listing, particularly from this region in Australia? Just briefly.
I just wanted to make one comment really around process and getting prepared. I mean, I think I saw it recently on a recent IPO where we actually had a CFO coming in halfway through the process, trying to get up to speed with the business, not really knowing the business from day one. I really think management time on an IPO is critical, and it takes a lot of time to manage the process plus running the business day to day, because that's obviously what needs to happen. What I have seen successfully recently is actually the appointment of a project manager, and there are a number available within Australia who have been through the process before, can be appointed as a consultant to run the process, allowing management time to go on roadshows and to also continue to run the business day to day. So it's just something to maybe bear in mind if you are thinking of a process going forward.
Anybody else for a quick comment?
Investors have a limited amount of funds and a limited amount of time. So firstly, make sure that your company presentation is easy to understand. A lot of the people with money are the 40, 45 and up to 65-year-olds, and they're not using all of the technology that you entrepreneurs are. So you need to educate them or help them understand quickly what they're actually investing in, and to explain to them that you have something different and that you're going to put, as Patrick put in his opening address, the passion to deliver that business versus the competitors.
I'd just add probably factors around the team, plugging both at the management team level but also the board level, where there is perhaps a lack of experience with being an ASX listed company. Bringing in the appropriate board member with that experience, I think, adds a lot of value to the business and also the investment story.
Ming?
Thank you. If you've got a great business and it has great potential, then I think what you need to do is you need to set your mind down on your goals, right? And if your goal is listing, then it's very important to just keep persevering. You know what I mean? Dive into the process and don't give up no matter what. Because the number of doors that will open and shut in your face, right, is there, like Patrick said, but you just gotta push through them, right, and find an investor or find investors that like your business.
Great, thanks. So that takes us to the end of our session. Thank you very much. I understand there is quite a lot of content here about listing. There's a dedicated session this afternoon, and I think there's another panel tomorrow, so I highly recommend that you go to those. But in the meantime, if you could please put your hands together for our panel. Thank you very much, guys.